2, 1.
As is tradition, the kudu horn was blown at the opening of the JSE this morning. As part of the ongoing BRICS discussions, the critical issue of how capital markets can be used to aid growth and development was top of the agenda. The BRICS Business Council says the private sector's access to capital continues to be a major stumbling block and needs urgent attention.
Capital markets serve as the catalyst that fuels the economic growth and sustainable development. They are enablers, particularly through which the private sector can raise capital and turn that capital into projects that drive economic development.
The JSE says it's doing its bit to ensure that businesses that need access to capital can do so through investors on the exchange.
The JSE sees itself as a conduit for capital, which is necessary in order to fully realize Africa's economic and business potential. By playing an essential convening role to overcome trade bottlenecks, rebuild businesses, and find sustainable solutions to persistent challenges, together we can restore investor confidence.
Panel members lamented that it's seemingly only big business that's able to access capital markets. The JSE says given this reality, it's developed a private business segment in its offering which specifically caters to smaller business, enabling them to get funding from willing funders. While the Egyptian Stock Exchange also says it's tried to be innovative in ensuring that SMEs can access funding to expand.
We've dedicated a special board or a special market for SMEs with a little bit more of a relaxed listing requirements and maybe disclosure requirements. We're trying to change some of the criteria, what to consider an SME, what not to consider an SME, and go to the main market. However, what we're working with them now is how to make them grow and transform from the SMEs market to the main market.
The new development bank, also known as the BRICS Bank, says it currently directly lends money to BRICS member states, state-owned entities, other development finance institutions and some private sector recipients. But it recognizes that it needs to focus on somehow getting funding to SMEs, even though that's not its direct mandate. So it's thinking outside the box to get this done.
We are beginning to construct very strong partnerships with national development banks and national financial intermediaries. In South Africa, we have the Development Bank of Southern Africa as a strategic partner of the bank, with the Industrial Development Corporation, the IDC, as a partner of the bank. So we want to use those institutions as intermediaries. For example, we have made loans to the DBSA. We've provided a $300 million facility. That is specifically earmarked for energy because energy is the single biggest constraint on growth in South Africa. So a lot of independent power producers are financed by the DBSA, but the funding actually came from the Development Bank.
In the meantime, there's a drive among African stock exchanges to attract more investment on their exchanges in order to boost liquidity, which will create greater opportunities for businesses to tap onto funds to grow their enterprises and the attendant positive socio-economic effects that come with that. Nompumelo Losiziba, SABC News, Johannesburg.